Good morning, everybody. Hope everybody's well. Today is January 22nd. It's about roughly close to 10 o'clock Pacific time in the morning. I wanted to talk about one of the companies that is coming up earnings this week, ASML, a Dutch company. And I don't know if a lot of people actually know about this company. What I wanted to do was to talk about what they do, what their market is, why they're important, how big can the opportunity get, and talk a little bit about, but not too much about, just what they do from a technology perspective and where they fit into the semiconductor value chain. This is important because I think a lot of people mistake semiconductor with only NVIDIA and Intel, maybe AMD to a certain extent, and Taiwan Semiconductor. Maybe some of the other folks might know them, but ASML is a critical equipment supplier in this space, probably one of the most important companies, and they have such a good lead over their competitors, if their competitors even exist. They do have some, but they are so far ahead and they are such a big company that it makes sense to be able to do a deep dive on them and also see what the opportunity is from a stock perspective. So let's dive in to ASML. So ASML, the ticker symbol ASML, the company has been around for a long time. If you look at the semiconductor chip industry, it actually powers a lot, if not all, of the world in terms of technology, from whether it's EV transition, automobiles, in healthcare, computers, obviously mobile phones, smart mobility in terms of automobiles themselves, and just AI. You look at the need for semiconductor chips, it's significant. So there's a fundamental secular need and growth for semiconductor overall. And the semiconductor market itself is expected to get to 1.3 trillion by 2030. So in about 6 years from now, going from roughly about 0.8 trillion, it's going to nearly double to 1.3 trillion. And these are estimates right now, on the low end for about a trillion, on the high end toward 1.3 trillion. But almost always you will find that these estimates, given their history, have always been low. So I would easily expect this to be in the 1.5 trillion. Now, the 1.5 trillion in the semiconductor space is for a lot of different areas. So although you might say, okay, that's a lot of money, these guys should get it. Within the semiconductor segment, the biggest growth is actually going to come from AI. And not only from servers and data centers, but also computing in the AI side from phones, mobile phones, and PCs. If you have been following the news lately, in the last couple of weeks, I would say, not even weeks, maybe days, Intel, Dell, HP, and even Samsung have been talking about the AI mobile phone and the AI computer, which is very high-end systems that sit at the edge that help you do AI tasks more effectively and more efficiently. So if you look at the computing overall, has a lot of different use cases. The biggest one of them right now is in the smartphone area and the personal computing area, $153 billion in each. Server, data center, and storage is a very close second, also around $153 billion. But the growth is going to come from all of these systems all at the same time. Automotive is also a big one, as you can see from this. You look at the big areas for growth. Smartphones is 153 billion, 153 billion again for data centers, so mobile and cloud, and then personal computing, which is just PCs, and then automobile overall, mostly towards EVs. Even non-EV vehicles use a lot of semiconductor chips, if you will. So the growth totally, 1.3 trillion, is going to come from these specific areas. But you should expect a lot more from the data center storage and the AI chipsets in the areas and servers, and also smartphones and computing. That's going to really drive AI market. Again, the memory and logic are the two big areas, if you will, to look at. So it's processing, GPUs and CPUs, and then memory devices. So processing, this is Intel, this is AMD, this is NVIDIA, and then those are logic devices, if you will, CPUs and GPUs, and then memory, which is Micron, Samsung, SK Hynix, companies like those. Those are the two big areas. Again, there's a lot of different areas, but these are the two major broad semiconductor needs, if you will. The value chain itself comprises of a lot of different areas. So where it starts first at the left is the design. So many companies start to design what the chip would actually look like. What is the specific use case? What does it need to do? And then once they do that, they use EDA automation solutions like Synopsys, SPNS is a ticker symbol, ARM is a ticker symbol for ARM, and then Cadence Design Systems, CDN, sorry. And these companies help you lay out what the chip would do, what it would look like. Once they do that, then they go into, these software solutions are used by fabless design companies like NVIDIA, Qualcomm, AMD, etc., to actually help companies put together the design of the chipset. Then they go to the fabs and the foundries to actually get built. Intel is building its own one in Arizona. TSMC is the world's largest. Global Foundries is another. UMC is another. So if you look at the foundries, including Intel, of course, Micron has its own manufacturing as well. Samsung has its own. These are the big customers. The foundries are the big customers for ASML. Okay. Now, the equipment providers such as Applied Materials, ASML, Lam Research, these are the ones that provide equipment that helps the foundries to be able to build chips at scale. That's what ASML does. So the way ASML works is they have a very few set of customers. They have only about 20 to 50 customers, and they only make about 300 to 500 machines a year. But each of their machines sometimes goes to $150 million each machine. So they provide these machines to TSMC, which uses Applied Materials, Nikon, ASML, Carl Zeiss, etc., and then puts them all together. And TSM then uses it, TSM manufacturing, TSMC uses it to manufacture chips. So what ASML can do, TSM cannot, and what TSM can do, ASML cannot, from a supplier and a customer perspective. And then if you look at the equipment providers, as you see, Applied Materials, Nikon, ASML actually used to compete with Canon, Nikon, a lot of the Japanese providers, but just absolutely has crushed them and moved way far ahead of them in terms of EUV, extreme ultraviolet lithography. So we'll talk a little bit about what they do and why it is useful. But this gives you a little bit of better context. And of course, at the bottom, you have integrated device manufacturers, you can see. So Samsung, Micron, Intel, as I mentioned, they not only do the design, they also do the foundries, they also do the packaging, test, and assembly, and then they push it out. If you want to simplify it, first you design it, then you fabricate it, then you assemble and test it. And the manufacturing equipment providers, lithography tools, as you see here on the bottom right, ASML provides to the fabs and integrated device manufacturers, integrated manufacturers such as Intel, TSMC, and Samsung and others. If you look at the CAGR, just in terms of growth, you can see TSMC at the 24% growth rate in terms of the EPS, and then ASML is in the 24% as well. Somewhere in the similar kind of a range, but this tends to be one of the largest in the equipment manufacturers area. And then if you look at the smaller ones are obviously growing a lot more faster overall. The blue color, dark blue color indicates United States. This is by region, if you will. So the largest are the much smaller companies, just keep in mind. But among the equipment providers, 24.5 EPS% growth is excellent. Now, semiconductors overall, as I've mentioned in the Micron video, is a very cyclical market. In 2020, 2021, because of COVID, a lot of computers, laptops especially, got bought by companies who wanted to move their people quickly over to working from home. And so that created a big amount of demand for computer chips. And that was the high point of the cyclical move. And then after that, 2022, 2023, there'd been a decline. And now it's starting to move back up again, as you can see with the semiconductor index, SMH, SOXL and SOXS as well. ASML actually has presence in multiple locations. They have presence. When I say presence, I mean they not only sell original equipment, but they also make about $26 billion a year, of which nearly $2 to $3 billion is just from refurbishment, upkeep, things of that nature. So they make two major signs. So about 40% of the revenue comes from logic chip related equipment, and then another 40% comes from the memory chip equipment, and then the rest of it comes from refurbishment, updates, software support, etc. So that's how ASML at a very high level makes money. Their presence everywhere. The headquarters is in Netherlands. Okay, so let's take a step back. What is lithography and why is it useful? Back in the day, this was probably in the 60s or so. You had your substrate, which is the actual semiconductor filament, and then you would actually print what you wanted in terms of a mask on top of that. So think of it very much like you have a piece of paper and you print on top of it. In this case, this is silicon substrate material, and you're actually printing the chipsets. And the amount of printing that you could do was fairly limited. That's the highest level, just to keep that in mind, right? That's how it started, just simple printing. Now, over the years, given how fast the computer technology semiconductor space has moved, what you have to be able to do is to actually use lithography, which is actually etch on top. As you can see here, you use light and you make patterns within the photoresistant material at the bottom. So first, they will deposit all of the materials, silicon over the wafer, they will coat it, then they will actually do the lithography, and then they will bake it, and then they continue to do it again and again and again. Once you get that, then they will test it, and then that's when the chips are available to be able to get shipped. So lithography, think of it at a very simple end user level as just printing what the design is that's provided by you using Cadence or Synopsys. Now, Qualcomm could use the design to produce a communications chip. Intel could use it for a computer chip or server chip, and NVIDIA could use it for a GPU. Different people use it for different things. But then when they say, okay, this is ready, now we need to etch this on top of silicon, TSMC takes that and says, okay, we're going to use machines from ASML and then etch that on top of that. So what it does, you have ASML in the middle of suppliers who give supply chain, the suppliers who provide for ASML are called these, the camera equipment. A lot of that is provided by suppliers of ASML. And the customers are usually integrated device manufacturers, Intel, for example, Samsung, for example, Micron, or foundries, someone like a Global Foundry, someone like a TSM, UMC. These are the big manufacturers, sorry, the big foundries that use lithography to a large extent. The reason why these guys are so successful is they've gone from 200 nanometer down to 5 nanometer in a matter of 20 years, and they're so far ahead of the competition. Just to give you context, back in the 70s and 80s, Japan and Japanese companies in particular, along with the government, spent close to between 5 and $15 billion to try and create the next generation of EUV, extreme ultraviolet lithography, and they were not able to be successful, so they backed out. Yes, there are some smaller competitors, but they offer in spaces. If you want to have a new fab open and you want to be able to do 3 nanometer, 5 nanometer, 7 nanometer, there's no other choice but for you to go to ASM. This is a very good, important company in this entire value chain. There are other important companies as well, but they, I think, are primed to be able to grow very well on an ongoing basis. If you look at where ASM makes money, 70% actually, so I'm sorry, I thought it was 40-40. It's actually 70% of their money, 2023, is going towards logic. It was 80%, now it's gone down to 70% in about a year. Not a year, this is just for Q3, sorry. So it's still, I think they're about 40%. So I've got to check on this, but I'm pretty sure they're about 40-40 when I checked last. I'll check again. We'll do that when we get into the 5-step process. For the end use in terms of memory versus logic for Q3 of 2023, it was 70-20. Okay, so they have different products. And what they have been able to do very effectively is to get a good mix of their products. And they ship primarily to China and Taiwan. So whether it is even in Taiwan, TSM manufacturers and managers also in China, whether it's Micron or others, they all manufacture in China as well. So TSM, ASML does ship to China, they do ship to Taiwan. And now recently, the US government is pressuring ASML not to ship the advanced EUV products to China in a competition with China. Roughly in the last quarter, Q3 of 2023, they ship roughly in about hundreds of units. So you look at this 40, another 450, 50 plus 90, about 120 units is what they shipped. The most expensive being EUV, which is hundreds of $150 million, and the least expensive being KrF. Okay, so in terms of end use, as I mentioned, they make money in 3 different ways. First, they make money by selling to logic foundries, which in this last quarter made up 70% of their revenue. 30%, 20% made from memory, and the rest of it from install base management, which is a fancy way of saying we sold stuff that was refurbished, we maintained, we managed. In software terms, that would be a maintenance fee that customers pay. Okay, one of the big challenges coming up that they are transitioning to is the ability to the ability to leverage moving from the use of fossil fuels to renewable energy. And semiconductors are very crucial in this entire supply chain, all the way from whether they are solar panels or wind to the storage and the generation, and then finally to the end use cases themselves. If you look at it, nearly, if you go from ICE, internal combustion engine car or automobile, to a EV, you'll get nearly 2 times the footprint of semiconductor required in the car, which is going to $1,500 per vehicle. Is just things that you pay for chips. So it's not only in computers and mobile, but also in cars. Cars are essentially becoming very fast semiconductor and some amount of other stuff, but it's mostly just semiconductor. What they've done very, very well is moved from a very large 40 nanometer level all the way to the 5 nanometer level, where this is more in the actuators area, and that is more in the central core, the main system. So where TSM is pushing, where Global Foundries is pushing, where Intel is pushing is in the 5 nanometer area. You do need these 40 nanometer chips. They're more for signal operations, much older in terms of technology as well. You could say it's more mature, which is older. Another way of saying it's older. But where they're pushing towards is more advanced 5 nanometer chips. And the other thing that is interesting is every country and region, whether it's EU or countries such as US and China and Taiwan and Korea, they're all pushing for more sovereignty over their technology future. So they're saying, hey, we want to be able to build it ourselves. So they're putting a lot of money. A lot of these countries are putting a lot of money in subsidies and also in tax breaks and credits to be able to have semiconductor companies build their chip foundries in their country. So whether it's the US with the Fabs Act, that actually gives a lot of money to TSM and to Intel to build fabs in US. Similarly in China, similarly in Europe, they've done it in Germany. Japan is doing the same. Taiwan is doing the same. Everybody is doing the same. So this just increases the dependence on ASML for a lot of these companies. If you look at the ecosystem overall, forget about the ones at the bottom. Of course, Google, Microsoft, Facebook, they all use and they build their own chipsets. They design them and then they give it off to TSM to actually manufacture them. And they have networking on top of that with Cisco and others. And then you have Apple and Qualcomm and all of those that also provide. So the ones that really matter for the top left to ASML are TSM. And there are other companies that you can see over here in terms of their market share, 8% ASML. If you look at equipment alone, Applied Materials is second at 7.6%, Lam Research at about 5%, then KLA-Tencor at half of that, about 3%. So in the semiconductor equipment manufacturing space, these guys have tremendous market share, just an absolutely killer market share. They're doing a very good job of it as well. They have a lot of different products, and they continue to make optimizations all the way to 2034, 2038 is what they're expecting. Look at this. This is the most important part. 7 nanometer chips get down to under 4 nanometer, 3 nanometer, 2 nanometer. This just means that dimensions becomes much, much smaller, and it gives you the ability to scale rapidly, which means it reduces the footprint, but also makes it extremely hard for competition to come in, which is why they're doing so well. We talked about every country literally trying to be able to provide subsidies and tax credits to be able to build foundries and chip fabrication in their country itself. So you look at Intel, they've got credits in Israel, Germany, Ireland, and also in the US. And TSM, similarly, you can see mostly the blue is all TSM, the darker blue is Samsung, and the lighter, the red is TSM, sorry. Blue is Intel, and Samsung is darker. So these are the 3 major customers, and they've got footprint in every location. So direct ultraviolet versus extreme ultraviolet, they still have a lot of use of the direct ultraviolet technology, which is the older technology, as I mentioned, 40 nanometer, versus the new extreme ultraviolet, which is 5 nanometer and lower, if you will. The systems, what they're expecting to do is to grow from high-end EUV, 20 systems a year. That's it. They only build about 20 systems a year. They expect that to go to a significant number, whereas the DUV is about 600 systems is what they're expecting in the 2025, 2026 timeframe. So technically, they will still make a lot of money in DUV, but the EUV is where the growth is. They're doing roughly about $26 billion or so. We'll go through the analysis. Overall, for 2023, they should be doing about $26 billion. That's the estimate from analysts, about $6 billion in profit. An ASL system, just for people that don't know what lithography or extreme ultraviolet lithography, this is what it looks like. This is like a big system that stay in one place, finish the etching, and then you get the chips out. These are usually kept in clean rooms in the foundries themselves. Wafer productivity has increased dramatically for them, so they're continuing to do very, very well. I like ASML quite a bit. So that's a little bit of background about the company itself, just to give you more context on the company. So what we're going to do now is to switch over and go to the five-step process on the stock itself. So let's go through the financials first. And almost always, as I mentioned, I always start in a annualized revenue basis and then work my way back towards the technicals. So let's go to first the annual income statement, roughly about $7.5 billion in 2016. And that has gone a little more than, I would say almost about 3 times in 7, 8 years to 22 billion. This year they're expecting 26 billion, but they're actually trailing 12 months is 28 billion. So a little ahead of the curve. So the growth was, so this was terrific growth, 3 times, 3x growth in 8 years. Grew well 30%, 27% in 2018, slowed down dramatically, and then picked up the pace again. 2022 was a rough year for all of semiconductors. So this was expected. And they've taken a break in terms of overall, roughly about 50% margins. Gross margins are in the 50% range, and then net margins are roughly in about the 25% range. Yeah, 50%, 25%. That's what it looks like at least. Margins shrunk in 2022, but expected to grow back again in 2023. Balance sheet should be good. I'm not too worried about this company. 24 billion in cash. Plant and equipment should be the next big thing. Intangible assets is about 6 billion, so that's not too difficult. And total debt is about 5 billion, very manageable. Very good, pristine balance sheet, very manageable balance sheet. About $7 billion in cash flow. That's good as well. Let's look at their valuation numbers. So remember again, they're growing. Let's go back here, income statement on a quarterly basis. They've been starting to grow again. So this was phenomenal growth in Q1, then slowed down dramatically. So this was an exception given how badly they had done the previous year. So Q1 of 2022 did badly, 24% negative. So they've just made up a little bit more over here, growing at about 20%. That's what is very, very good about this. Again, cyclical cycle, semiconductor moving up. So they're growing at about 20% top line, and bottom line is also growing at about 20%. So for 20% growth in revenue with about 50% gross margins, 25, 30% net margins, you're paying about 10 times sales and 36 times valuation PE. That's not bad at all. If they continue to be able to have that growth, this is one of the best plays for 2024. Given that TSM announced very good earnings, this is probably a very attractive company. The stock, of course, don't worry about the $769. Think about the overall market cap and the value of this company. This is decent earnings. TSM, just to give you context, again, they're not comparable, but they're in the same space. So you can technically compare the PE ratios of both of these companies and get a quick sense as to whether this is more expensive, less expensive or not. Compared to an Intel, compared to an AMAT, that would be probably a better comparison to make in terms of ASML. But TSM, just to give you a little bit of context, is from a PE perspective, is roughly about 22 in a range that is not bad at all. So they're a little bit more expensive. ASML is a little bit more expensive. If I look at it overall, and I had to give a rating from 1 to 10, pristine balance sheet, revenue is growing at 20%, margins are pretty good, cash flow is pretty good. Overall, I'd probably give them an 8 out of 10. And the fact that they're continuing to grow, the earnings coming up in a couple of days is a very, very good sign for you to watch very carefully, see where they end up, because this is going to be, and again, it's gone up a little bit today, but this is a company, earnings are coming up tomorrow before market open. So just keep that in mind. Okay, what did it do and where did it go? Long base building. This is stage 1, very nice. Stage 2 markup, stage 3 markdown, stage 4, and then a markup again, decline, stage 4. Now, in the long-term basis, they're actually in a stage, this is stage 1, and then now in a very steep stage 2. That's where you want to keep in mind. And their all-time high was in the 886 range. I wouldn't be surprised at all if they get there by the end of this year. So this I would probably remove. So they're right now at the 768 range, and I wouldn't be surprised if they head to the 895 range. So long-term, where are they? They're an uptrend, markup stage 2. Okay, we're gonna adjust it a little bit more, make sure that we know where exactly they are. Or so two things to keep in mind. Number one, yes, they are in a stage 1 if you had to look at it in the short term, but also this has been more than a year of just consolidation, chopping and churning, chopping and churning. So at the second thing you can, this is a positive to think about, is they actually just did a lot of consolidation over 2 years, and now they're getting primed up. So this is a double top. They're getting to the double top. They've got a breakthrough resistance, which I think they will. So on the medium term, weekly chart basis, they're actually just consolidating and getting out of a consolidation basis on a multi-year level. Okay, so now we go on to the daily chart. This definitely look like it's going just over the top. It's just broken through, I think. In the short-term basis also, it's done the breakout of this resistance, which was 766. So it's just breaking out. I want to push for earnings. Earnings coming out next week. This should take it a push up. If they are good, I think they'll be good on terms of their earnings for Q4. What I think, given how well TSM played, but what I think is interesting is what they will say for next year, which is 2024. And my suspicion is they'll say good things for 2024, which means the stock is going to do much, much better, which means expect a move to 895 range in this. Not a straight direct line, obviously. That's not what I expect, but I expect it to break through this resistance of 768 in the next couple of days after a good earnings. I've watched for that. And then from 7, whatever it breaks up, get it as close as possible. This is still stretched. Look at all the moving averages. The moving averages are all stretched up and to the right. So this gave you a chance in the January 24th sometime 705. So it's gone up 10% in just the last 2 weeks. So to keep that in mind, it will come back. It will always give you a chance. So it'll give you a chance somewhere in the 745 range as it moves up. And then that would be a good chance to be able to buy as well. RSI is still not stretched. Oh, MACD is pointing to the right direction as well. I like this a lot, but wait for earnings tomorrow, see what the pattern is. After earnings, it might come to a little bit of a dip pattern in the 745 range. That'd be a good place to buy. 1 year out, 895. This is a very, very good stock to hold. Thank you very much for watching. One of the things I really would like is to see if you guys can help by commenting or like or share this, and let me know what you guys think. And